Hi everyone, welcome back to this week Weekly Market Update. Once again, let's take a look what is happening over last week. It's pretty exciting. As you can see that market is doing extremely well over the last week itself. Since the start of China, uh, over the last week when we mentioned that things to watch out when we buy on rumor, sell on news, where there's a rumor saying that uh, China is going to continue to lock down. Subsequently, this week they actually announced that China is going to reduce the number of restrictions down to trim the quantity times by 2 days, as you can see. This caused a lot of movement in the China market, especially not only on that, the US CPI data came in below the expectations, so that caused the market to go even higher last Friday. We can see that Nasdaq at additional 1.9%, S&P 1% since June, right? So pretty good. Market finally upped, or we can say a second continuous sweep up, because when we look at the chart, right, we can see that this is a daily chart. This is what I mentioned. Still remember, I was asked you guys to watch out on certain level. I remember that last week, right, when we look into the chart, uh I'm actually predicting on this part. All right, I'm predicting on this part. I say that I'm betting on the downside because there's a resistance at this 50% Fibonacci, which is at the 32,800. Okay, however, when you can see on the candlestick itself, right, the market actually penetrate on the Tuesday. All right, penetrate on the Tuesday. Mainly is because of the what do I mean by the elections, the president elections is ongoing, right? Is actually more optimistic for the Democrats itself, but we are not on the politics talk. All right, it's just on the stock itself. So based on candle, we actually broke up. And then subsequently on Thursday, Wednesday, the market came down because people fear. All right, people fear that the CPI may continue to may continue to go above the expectation, and also the Chinese news, right, the press on the COVID itself. So, and we are also at the resistance. But then when the US CPI came out on uh Thursday, on Thursday, before the market open, right, the futures actually shoot up crazily 1,000 over point in the Dow Jones Index itself. All right, and that is resulted the market to gap up or shoot all the way up to the next resistance level around 34,000, which I highlighted, which is the 34,000 stated here, around the 62.8% Fibonacci level. All right, you can see. Okay, this is 30th October, which I mentioned, right? So there's another final level which we are looking, or perhaps the market is looking. I believe it's this level we are looking at, is this 34,300, whereby it's the peak of the previous hanging man candlestick. If you go into, I think I wrote wrongly. I think it's a shooting star. All right, it's a shooting star. So sorry, gentlemen. This is typo. It's a shooting star candle. So if you look at a weekly candle, right, you can see that the market is actually waiting for this shooting candle to penetrate, and then we can say that, oh, we are back to the bullish style once again. Okay, but just bear in mind, we are not really in a good economy status at current status, right? We know the inflation, we know that the US CPI is just 0.2% below the expectations, but don't be over optimistic. Maybe we coming to the end of the year, we can see the end of the years, the volume will get lower. Basically, firstly, it's the holiday, right? Holiday period season. Second is also the World Cup. People might shift to watching the World Cup, right? We need some entertainment on this after COVID periods for so long, right? So the volume might trim down, but what I'm looking at is actually this 34,300, waiting for any candle signal before we turn bearish again. But in the meantime, without any candles, right, we should be buyers on the upside, unless this resistance, which is the 34,000 stated here, uh plays out strongly. Play out strongly means there is no penetration at this 34,000 or close above it. Otherwise, if yes, then we are looking for a better candlestick before we take our stick. Next thing I also want to get, bring attention to you guys, right? The market is very volatile. As you can see, there is a huge swing down, swing up, swing down, swing up. It's unlike previous, this is the COVID period. Unlike the previous, where we can see the weekly is only moving minor move. Can you see that? All right, it's only moving. Then start to have some volatile in 1819. Then this is the COVID period. After COVID period, we know the pump money, so slightly slow. But as you can see, right, what happening on this year 2022 is very volatile. Volatile instead of the candlestick. Basically, looking at the candlestick, the size of the candlestick is like so big. All right, it's like so big. So this is actually the volatility in the market right now, because bear and bull is fighting crazily. But it's good because we need volatile, right? I mean, we need volatility when we are doing trading. In long-term investment, there's also stocks for you to pick up. All right, so what's my stand for here? Watch for a better candlestick signal. If you are more on the downside, we are right now at the resistance. Okay, so but I might move my attention back to the China and the Hong Kong market after they penetrate downwards, mainly because of the good news from the China side. This is the first good news, right? The Chinese actually reduced, right? We know that Chinese always want to stick to their zero COVID policy. Right now, they actually ease their COVID measures, trim quantity times by 2, which is a good side. All right, who knows, sooner or later they may open up. Remember, I mentioned many ways ahead in my video. What China is doing is actually a tailgate of what US has been doing. US lockdown, market very bad. US open up, pumping the money, and then the market boost for 2020 to 2022. So what is happening in China? China is you just wind back. China is right now at the stage of 2020, whereby they are going to boost the economy. This is my personal opinion, all right? You may not agree with me, all right? You may not agree with me. China's election just over. China's say want to maintain their zero COVID policy. China right now is their COVID measure just a few days after they mentions that. Is that a play out from them? I'm not sure, but the chart will not lie, alright? So there's a couple of chart which I mentioned in my Facebook page last week. I mentioned on Baidu, right? So yes, this is what we are looking at, support. So we shall see this chart later on Baidu and some other counter. So let's look at Hang Seng Index. When we look at Hang Seng Index on the monthly chart, very big perspective view, right? Very long perspective view. We right now are at the support area. I personally like this candle. If you combine these two candle, right, it's actually a reverse signal. All right, it's an engulfing. Can you see it closed above the open price on the monthly candle, and we have not end this month yet in November. So if let's say it continue to go higher, right, this candle is something formed like this. All right, so this happened at the bottom of the downtrend is a reversal. If you can Google it, all right. So I don't need to explain. I mean, you can Google what is shooting star, what is hammer, then you should know this is one of the reversal. If these two candle combine together, is forming this candle. All right, so this is a reversal sign. If you catch it right now, we have not end of the month yet. We shall see where it goes, but this is the monthly chart right now. I'm likely in the favor of the upside, as if we able to close above 18,000, you will be showing a good sign. All right, so this is what I'm looking for Hang Seng, and of course we are looking back to China A50. All right, so for China A50, this is what I mentioned last week. You don't say that I flip, all right? You don't say that I flip. I'm mentioning about support 10,000. That is because we thought that COVID may continue, right? The policy of zero policy. Can you say it remains zero COVID policy? Otherwise, it should go up if let's say they reduce it, right? Since they have doing some action on the COVID, it's a good sign for the market. China may open up. So right now we are actually at the bottom, rebounding back. Of course, we are still at the downside. But why I will pay my attention more on the China is because we know that US is actually at the high side, coming down. China is already at the bottom side, waiting to go up. So I think the fund may actually cross path, shift over, or the cryptocurrency, we know what is happening to the FTX, may actually shift some here as well. So I'm more biasing unless, but I know it's hard to play, especially there's a politics for China, but just nimble along the way, all right? Just nimble along the way. So let's look at individual counter. Remember I mentioned Baba. All right, this is why I put support 55, resistance 100, 110. So right now, looking at the candle itself, this is the 30th. Is this candle 30th, it go up. Right now it's trim up. All right, a small trim. I think it's good. Just maintain 55 as your support. Drop must cut. Otherwise, you can pick it up, Baba. Don't forget, if you miss this counter during the IPO season, once again, the time just rewind back. How many years back for you? 7 years. So why not? All right. Nimble a bit. Baba is a good company after all, right? Next counter we are looking at into is NIO. Today mainly all the Chinese related ADR. This is what I mentioned. Last support $10. Rewind back right now. Where are we? Close at $11.56 last week. All right, last Friday. But for NIO, right, gotta be more cautious because the earnings report stated not good last week. All right, stated no good, and we know that Tesla has been dropping, so both is competitive enough. But the thing is that right now we are actually at a support area of $10, a good support area, a round figure support area, which I point out previously. So I think, personal opinion, is a good price to nimble as well. All right, it's a good price to nimble as well. We will never know what is happening on the market. All right, never want to have the crystal ball unless you have insider news what is happening. But in the meantime, I think it's a good risk reward for you to pick it up. Because don't forget, still Chinese EV, right? Uh, Chinese might want to act as an environmental friendly ambassador right now since the new government step in. So we can actually consider to pick it up. And after the earnings report, the price did not go even lower. It might bounce back with the overall economy. So I think it's good to nimble a bit and NIO counter as well. But do take note, do not overlook your Chinese related shares. All right. So what do I mean? Don't put all your portfolio turn into the Chinese unless you are a gambler. All right. You want to gamble throughout this short-term period, by all means. I'm not stopping you. We have different type of investor, of trader out here, right? But if you do not have any Chinese counter or you remove previously, it's good to put one or two back to your portfolio right now. Okay, another counter we are looking into is actually, let me take a look, Roku, which I mentioned right last week as well. Okay, so this is the bottom, which I mentioned. Can you see it came down to the bottom? So if you have picked up during this area, it bounced back. Congratulations. Yes, we are bottom picking, but we bottom pick at a better time, right? At a better support level. Okay, I might be bottom pick here, die along the way. I might be bottom pick here, die along, but at least I cut. All right, at least I cut. And once if I get it right, I will just ride throughout. Okay, cut your losing, write your winning. This is how it works, right? Okay, so that is what I mean. Okay, next counter we have been looking into is back to HST. I remember this is a Singapore ETF on the Chinese counter. I remember I recommend somewhere here. I came down, I cut. I don't give chance. If it break my stop loss, I cut. All right. Right now it come to bottom, I pick it up again. So I save this path, gentlemen. So if you should know that you should not fall in love with stock. I believe many people do that. I used to do that as well. But you should not fall in love with stock because you see, think about it. If you have cut at this position, where the price drop back and you buy it bottom, is it better that you ride throughout? Am I right to say? So we will never know where is the bottom. Of course, you monitor the news. Of course, you monitor my video, right? That is where I give you the recommendations. What is happening to the news, not recommendation what to buy. Just to watch out in your watch list. All right. So next counter is actually HST. Good volume. Good spike up. Due to what's happening to the market of the Chinese, right? This is Chinese related. So if you do not want to go to individual topic of Chinese tech, you can consider this ETF in the Singapore market, or you can continue to support in this KEWP, the US ADR as well. All right, it's the same Chinese ETF. All right, this is the bottom. Remember, we are back to the bottom. Market is doing pretty stable right now. Hopefully, no Chinese politics come into play. Okay, this will definitely shoot up if the Chinese government say that they are going to rewatch the or ease on the regulation on the technology side. Okay, on the stock market side, definitely is meant to shoot up. All right, so just be cautious, nimble a bit in between. Next counter we are looking at is to Meta, which I mentioned last week as well. This is support worth to nimble. You can see support worth to nimble. metaverse. Right now, we know what is happening to the Facebook. Finally, he wake up. He know that it's burning a lot of cash. He cut 11,000 jobs out there. I mean, it's sad to say, cut job, but it's a transition period for company to survive, right? Without cutting the 11,000, if the whole company collapse, everyone go without a job. Cutting 11,000, saving the remaining, I think is a wise method for Mark Zuckerberg to move it. And that is why it take a positive stance in the market and the market rebounds back. All right, as long as it don't cut, as long as it don't burn the cash that much or that fast, it's still worth nimble into Facebook. This big giant counter used to be. All right, so everyone is trying to grab a pie into Facebook. That's why it go bounce. Next counter, we can see that all the technology is actually bouncing back. On Nvidia 120. That time I remember I put my 120 as a support. Break below, it didn't close to this 80 to $100 zone where I'm looking to buy in. It bounced back here. So since I miss it, who can I blame? Am I right to say I'm more greedy? I'm looking at way below. Same goes to AMD as well. This is what we are looking at, right? 85, 72, break below 72. This is the review next support at 50. So I think you go to close 55. If you pick it up, it's good. If you miss it, not to worry, we are still at the downside. They may tend to have some rebound back before we buy back. Not to worry because right now we are still below the 200 days supported or perhaps resisted, haven't penetrated yet. I think high chance it may go up, but just be caution on the earnings because I don't think the earnings is good and a lot of company is giving profit guidance, right? As you can see, the earnings is not that fantastic. All right, we may have some rebound here. If you want to pick it up, just nimble. Take note, we are not out of the bear zone yet, bear territory. So if let's say you have any profit in between, it's good to put into your pocket, all right, in between. Next counter, and I think it's the last counter I'm going to look into it, is actually Tesla. All right, extremely volatile after what happened to Elon Musk bought over the Twitter. Remember, support area 180 to $200. I think it's a good price. We can see if only after it closed below. All right, because Elon Musk dumped a lot of shares, right? But the thing is that Tesla is everyone's dream. True or not, Tesla is everyone's dream. So if let's say it penetrates 180 below, we are looking at this 200-day moving average. Hopefully, it can be the first touches after so many years. Touches here, a good support area, and then it bounce back. All right, so two method you can do right now: nimble here, dollar averaging, second support here. All right, if let's say it break below 180, subsequently break below, don't enter in too early because you already entered two batches, or you wait for the first batches to enter. Wait for a more lower side. When it show a rebound, then you go in for the second batch of entering. All right, so that's all for this week weekly market update. Oh, just to take note, subsequently there will not be any weekly market update for the next 2 to 3 weeks. Just a pause. I'm actually away for an exam as well, so I would like to take a break for my study break. So I will be back until the second week of December. All right, second week of December, or if let's say there is any emergency or perhaps important update, I will put into my Telegram group. All right, so if you have not joined me, just join in once a while, take a look. All right, that's all for this week weekly market update. Hopefully you guys enjoy. Remember to share and like. Goodbye. Enjoy your weekend.